Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Standard disclaimer before we dive in: nothing here is investing advice. Do your own due diligence. And today's guest is a professor of organic chemistry at Cornell University, a libertarian and a fan of the Austrian business cycle, who has appeared on Stansberry Research, The Jay Martin Show, and Palisades Gold Radio, among many others. It's Dave Collum. Thanks for coming on the show.
It's my pleasure. I'm glad to jump on here. This will be fun.
Yes, I've wanted to have you on for a long time, and I want to get started, like I do with every new guest, with the origin story. So how did you first discover investing and financial markets, and how did that road lead you to where you are today?
When I was a kid, my dad, we used to talk about stuff at the dinner table. He is a small business owner, so we got kind of a ground level economics training. He set up his pension. He did everything. Ran a 350 person construction company. So he really was wisdom personified. At one point, I thought I was going to go to Wall Street when I was in high school, and then I got sidetracked to pre-med and ended up doing chemistry and stuff like that. I didn't do anything investing wise beyond just dump the usual amount. I had one fateful moment. Here's something worth noting for your listeners. When I was really young, I just bought a house, spent a lot of money, and I'm reading a USA article, and it said, are you saving enough for retirement? Could you save more? And I said, yeah, I probably could. Cornell puts in 10%, but I wasn't putting in much more. And they said, here's what you do: put in 1% a year more each year, and soon you'll be up to a high number. And I did that and accelerated it. And so I got to a point where I was saving 28, 30% of my gross. So that was my first big decision. I went from pure bonds in 1980, post 87 crash. I was talking to a colleague about it, and he said, you really ought to have equities in your portfolio. I was all long bonds. And so post 87 crash, I shoved a big wad, Texas Hold'em, into equities, was a bull. Got into it because of a friend in the early 90s who was a traveling salesman and was collecting tips from CEOs and stuff. And his tips were working out really well. Like, I'm not sure how legal they were. And so I became a raging bull. I was a tech bull. I owned Dell and WorldCom and all these companies, Warner Lambert, a company called Tomra, which I discovered myself, and made 500, 700% kind of numbers. At one point, I was actually levered, which shows you it was a bubble when you suck guys like me into being levered. 98, I decided it was screwed up. I moved half my equities to, and I started reading a lot about markets, but in the mid 90s for the first time. And by mid 98, I moved half of my equities to cash, and thought trouble was coming. And then the Asian crisis showed up, and I didn't know if I was half genius or half idiot. I wasn't quite sure. And so then I said, look, if it comes back, I'm moving the rest because I just don't trust this. And they came back. And so by the mid 90s, I was exiting all my equity positions, including capturing a 700% WorldCom gain, a 700% Dell gain, and a bunch of others. I started buying gold. There was about 20 people in the world who seemed to think that was a good idea, but somehow I got into that. So by 2000, I was long gold. I actually even had a short position, which again is a sketchy thing. I've done that twice and it worked, but I won't do it again, I don't think. 2001, I started investing in commodities. It's just an inflation hedge. And so I talked to Jimmy Rogers' partner and the Rogers Raw Materials Fund, and it was intriguing, but it's all derivatives based, and I was spooked by that. I talked to one of the market makers, and he didn't alleviate it, so I skipped that and just went into Fidelity Energy funds, basically. And I went pretty aggressive, and the decade of the noughts was, relative to my competition, was by far my best. By far, I had a great the 90s were phenomenal, but relative to my peers, the noughts were the best. So while they were getting killed, I was compounding about 13% a year. I started writing an annual review, which started out as a couple of pages to friends who were at a chat board. And then one day I went kind of viral, and one year I decided to write a big one, and it went very viral. And so ever since I've been writing my year in review, or what my wife used to call my urine review. And it's now become gigantic, which is I've got to get control of it because it's book length. It's about 300 pages each year, and it rips my soul out to do. And I've had people say, don't do it, it's not good for your health. I have others say you must do it because no one else is doing it. So it's a kind of a good news, bad news thing. What I think appealed to markets is, as a chemist, I dealt with profound complexity, even on chemistry standards. I went into a field that some said was hopelessly complex. I'd never figured out, but I did. And I was a contrarian. I was kind of a loner. No one followed me. For 40 years, I banged away in the field. And although pharma was a huge consumer of what we did, and academics were intrigued by what we did, I was not the Pied Piper. To this day, I have trouble getting referees for my papers because there's just not people who know really how to referee the papers. So I think it's the complexity of markets that caught my attention. Now, through chemistry, we found that in almost every study we ever did, that what the conventional wisdom said was true was wrong. And sometimes it was profoundly wrong. Nobel Prize winning claims turn out to be wrong. So what that gave me for the investing world was the capacity to look at a panel of experts, 12 central bankers, and say, I think you're all full of shit. And very, very, very few people have the capacity to sort of, face into the headwinds of conventional wisdom and say, I think you're wrong. I'm going the other way. And so I think that's helped me. My worst decade compared to my peers was the last 10 years. So in 08, 09, I wrote about the 07, 08 problem in 2002. I'm on record saying it's coming. I was obviously 5 years early, but I said the banks were going to collapse. Subprime mortgage, whole thing was there. One thing I got wrong is I said JP Morgan was going to go down. I thought their derivatives book would drag them down. But in 08, as far as I was concerned, the damage was far too severe to get away with a regression to the mean, which is what it did. If you don't analyze carefully, you won't notice that even though we fell from 50,000 feet, we ended up at sea level. We didn't end up in some horribly oversold position, maybe technically, but not thermodynamically, not valuation wise. So I felt that we had much more damage to be dealt with. And what I didn't see coming, and no one did, was $30 trillion of bailouts. It was an unimaginable experiment on the part of central bankers. I believe the bill for that adventure is in our future. And so I am right now probably the most bearish person on Twitter.
Well, that's great, because I want to segue into talking about the broad market and draw on your experience with the 08 crash as well as the dot-com bubble. Do you see any parallels there, any similarities to the setup for those two crashes and what we're experiencing today? Or is this an entirely different animal in your view?
Well, it kind of feels a little like March of 07, where I think people can smell the problem coming, but the audible cracking noises in the market was around March. I actually said to my class in March of 07, I turned to the class. I tell bizarre stories to the class. Sometimes I get in trouble for the stories I tell. And I turned to the class one day spontaneously and just said, I think the banking system's about to collapse. And I was watching the market ABX index and reading this woman named Tanta who was talking about the turmoil underneath the surface, and people who were paying very close attention were picking up the audible sounds of a market breaking. It's shocking. It's like a block of ice in the sidewalk at 95-degree heat. You say, well, it should be water, and you go, yeah, but it takes time, and so it takes a while for markets to melt down, so I have the markets right now at probably 120+% fair value. And so if we regress to the mean, we're talking 50+% correction. And that's just the mean. So if we finally do damage that I thought we should have done, It could be a 75% correction, could be an 80% correction. We've had them in the past, but we've never been so far into debt. We've never been so sort of hanging out over our skis, in my opinion. In the 67 to 81 correction, inflation adjusted, I think it was about 75% down, inflation correct. And people who don't adjust for inflation, they're just nitwits. If they got PhDs in economics, they should be removed. So if you adjust for inflation, it's about 75%, I think. And by the end of that period, you couldn't give away equities. They were dirt cheap. The problem was that inflation looked like it was out of control and would never stop. And so you can see why people said, I'm not buying an equity with inflation raging at 15% because they're not paying me and they've sucked so bad for so long. And, that's the bottom. That's when you can't give them away. That's when you should probably buy it. I was buying gold from 290 down to 270 because I was competing with 20 guys to get that gold. And every once in a while I'd read about some hedge fund buying $1 billion worth. I go, oh, that's an interesting story. Someone's positioning for that. And so I think right now we're in this lull. While I have a different read on Powell than most people, there's three Powells. There's the people think Powell is sort of determined to tamp down inflation probably more aggressively than people think. There's the people who think he's a complete wimp and that he will chicken out the minute the market starts shaking uncomfortably. I think his goal actually is as much about tamping down speculation. So I think he realizes that they have created this monstrous bubble, and it shows up as an inflationary push. It shows up as you can't be Powell and look at NVIDIA trading at 45 times revenues and not lose sleep, right? He's not stupid. You can't look at, that Microsoft, a fivefold, 500% of their gains, fivefold of their gains over the last decade are valuation expansion. So here's my bearish pitch. I'm going to give you I do this on almost every podcast, and I feel sort of guilty because I go, I was heard it, and I go, yeah, but the overlap in podcasts is not as much as you might think, Dave. So here's the setup. Warren Buffett, 99, said it's all about interest rates. Dropping rates, bull market. Rising rates, bear market. He says that's it, right? Now, Wall Street turns that into low rates is bullish. No, dropping rates is bullish. Once they've dropped, there's no more drop left. The only direction is up. And so Warren would say duck based on his 99. I think it's a Fortune article. You should read it 4 or 5 times if you haven't read it. So in 81, valuations were, for want of a better metric, which my least favorite is price earnings ratio because they're so easily rigged, was about 6. Interest rates were sitting at, sort of the high teens. And as a consequence, the ability of rates to come down, they were about to start a 40-year march down. The boomers were young and ready to go to work. They brought their wives, and therefore the demographics were completely and utterly in our favor of being a productive society. Russia was not, the Soviet Union had not yet collapsed, but they're starting to get desperate for capital. So they started selling commodities for pennies on the dollar because they needed any kind of money. China was coming out of the dark ages. They were desperate for capital. They literally had 38,000 foreign reserves in the bank at one point, $38,000 of foreign reserves in China's bank. They started selling labor for almost nothing. And they did so for the next 40 years. And so rates marched down, labor was cheap, commodities were cheap, valuations were low. And what it produced was a recency bias. The recency bias is not since 2000. The recency bias is not since 2008. It's not since 2020. It's 40 years. Over 40 years, we had these unbelievable tailwinds that created the most amazing expansion of valuation ever. We went from a valuation of P of 6 up. You can check 25 different valuation metrics. The valuation, which should just flutter around and not move that much if valuation stayed at fair value, because it's a price of the market divided by something that ought to track the market. So it accounts for inflationary trends and everything. The valuation compounded it over 3% a year for 40 years. 3.5%, probably the best guess. What happens when, and I don't say if, when that valuation marks back down the other way? And it will happen. We will end up at some ridiculously low fair valuation at some point. I don't know when. Let's say it happens over the next 40 years. Let's say we march our valuations down 3.5% negative, compounded for 40 goddamn years. Now we're back to 1981. That is a 7% swing in tailwind to headwind. No investor can beat that. You can't short it. You can't do anything with it. Probably the best metric, the best analogy, but it's unlikely to be exact, is the Nikkei. If you were in the Nikkei in 1989, you're still totally hosed. If you were a young punk just starting to work for, Toyota, and you start investing in the markets in 1989 from no yen in the bank whatsoever, and you averaged in and put $1,000 worth every month for the next 40 years, 35 years, you didn't break even by averaging down for 20 years. It's a long time. And that's, I think that's what maybe even the global markets are going to do, with exceptions, obviously. That's a bearish case, right? That's a bearish case.
Yes. Do you think now is a good time to be holding gold? You mentioned when you were first buying into gold, there was very few people who were doing so around you. How do you feel like the sentiment is in the gold sector right now? Do you think now is a good time to hold physical gold? And are you looking at the gold miners as well as a potential opportunity?
So during the run from 2001 up, I had some miners. Gold goes to 1900, drops back down to 1200. Net rise from 256 up to 1200. It's really not a bad run. The miners gave it all back, and so to me, the miners were an utter disaster. I've given miner CEOs total guff for totally screwing the pooch. They all admit it. The claim is they've learned their lesson. They've tightened up. They've now maybe reaping the benefits of money they spent to give it all back, and so maybe they've developed mines. I don't know. But I don't want optionality. So I'm not buying a miner because there's gold in the ground somewhere. I want a miner who knows how to get it out, refine it, and sell it for a profit. And I was ignoring them until, back in 2020, I think it was, Fred Hickey said he was bullish on the miners. I go, yeah, and I did an eye roll air jerk. And then he started citing some of their numbers. I go, holy shit, those sound like tobacco stocks to me. So I started buying some miners. They haven't been great. I mean, they're going to get beaten up. And I'm a big believer you have to marry an investment. People say, oh, don't marry an investment. I go, how do you hang into it then? Right? How do you get through the highs and lows, right? If you're not married, you just dump that girlfriend and go find another. If you're married, you say, okay, we got to tough this out, right? And the guys who made 100 baggers on Microsoft, one common denominator is they didn't sell. They did not sell no matter what the hell happened. They were believers. And so if you get a really good idea, as Michael Berry would say, if it goes down, you just hang on to it. But gold is tricky. I could imagine a big whoosh and gold being dragged down by the big whoosh. So I don't know how to price gold. I just know that I don't trust central bankers, and I don't trust markets, and I don't trust narratives. You give me a plot, a geopolitical plot line, and I'll tell you who's lying. Right? I don't believe anything. I'm a climate denier. I think we should be sending arms to Russia. I think that the shootings are done by the CIA. I don't believe anything. I think 9/11 was an inside job. I don't believe anything. The COVID narrative was a complete fiasco. The climate change narrative is going to be the biggest because there's no way to prove it's wrong, so it can go for decades. So they're going to just fuck us up royally. If you're not a climate denier, you haven't read enough. You just haven't read enough. I could do two-hour dissertation on all the lies within the climate story, and go find me a physicist who's dug into it who believes it. Those are the guys who know. The solar physicists don't buy the narrative because they know the sun is doing it. So So in any event, there's a lot of lying. I don't trust institutions. I'll vote for Genghis Khan if he promises to fuck up the system. I'm as you know, Kennedy fan. Ramaswamy, some reservation super fan. I'm glad those guys are showing up. DeSantis is the Michael Dukakis of our generation.
Interesting. Yeah, I definitely want to dive into talking about RFK and some of the more controversial stuff later. And in terms of the climate narrative, I mean, that has been going on for decades. You can find articles back in the 80s, I think as far back as the 70s, people talking
Well, those
about
talk about the ice age that's coming. So
right, exactly.
but there's it's the fact they got stuff wrong isn't the problem. It's the compulsive lying. So I can catch the activists lying completely, demonstrably telling untruths. And when I do, then I say, okay, so you're not a scientist, you're just a liar. And when you dig in, you just find that the narrative falls apart. I was a believer until 2016. And then I dug in and I probably spent, I don't know, 500 to 1,000 hours. And I've come out of it believing that no one can possibly, even theoretically, predict the temperature 100 years from now. It's not even mathematically possible right now. So you say, well, we have to do something. I go, not if you don't know what's happening, you don't. And then it gets really absurd. They want to coat the earth with a cloud of dust. That's geoengineering. They then want to force us to use solar panels. So you're going to cover the earth with a cloud of dust and then force us to use solar panels. Meanwhile, you're going to outlaw generators, which will save us occasionally when the solar panels fail, right? It's a gigantic scam in which people are making trillions of dollars from the government. And so please don't believe the climate change story without digging into it. If you want to dig into it and still believe it, have a ball. But there's 24 books you read. Steve Koonin. Start with Steve Koonin.
Well, let's shift to the general commodities complex. And I'd like to get your thoughts on if you ascribe to the fact that a commodities super cycle is coming. You mentioned you think gold might fall along with the broader market in a market crash. Obviously, industrial commodities could do the same. Energy could do the same. Although the supply side, when it comes to the oil picture, looks quite bullish to me. Are there any commodities in particular you think might perform well, even in the face of a market crash and a recession, or perhaps afterwards? And if so, which commodities in particular do you think stand to gain the most?
Well, that's the paradox, is that my ultra bearishness says there's going to be a whoosh, and usually that creates such a liquidity tightening that everything sells. At some point, buying aging grandmothers will be cheap, right? It just, teenage daughters will be on sale. So the idea of being bullish on any sector when you think there's going to be this gigantic whoosh is hard. But I did start going long energy again after being out of it for a handful of years in 2000. And if that was the bottom, I nailed it. I mean, I didn't supersize it or anything because that's not normally what I do. But I've been trying to figure out how to do this with this uber bearish view. And so if you put a gun to my head and said, look, you got to invest your money, what do? I'd go with the super cycle. Now, here's the problem. On the one side of my mouth, talking out of both sides of my mouth, I think, and I don't know shit, right? Your listeners know way more than me. I have some skills for sorting through complex debris and pulling out sort of nuggets without math, without, one psychologist once said, he said, you cruise at 35,000 feet, see something and then immediately drop to the earth level, look at it, and then go back up. And I go, oh, that's an interestingly flattering description. I think you should probably be careful about buying into commodities for which you're going to have to get government approvals in large quantity to do anything, because the politics right now look sketchy. They'll shut your pipeline down fast. On the other hand, my brain says we are so underinvested in the commodity world because we've been doing that kind of political crap for so long that it seems to me that the guys who are developing the fields and the pipelines and stuff are going to be the big winners. And so that seems to be a paradox, right? How do I get around that? I don't really know. What I'll probably end up doing is just indexing the shit out of Fidelity funds, right? There's about 6 commodity Fidelity funds. Maybe there's more now, but I figure you get the 6, and, the top 6. And I own a bunch of Rio Tinto. I look at balance sheets. If I buy a company, I don't want to see any debt. And I think we have not yet begun to see companies hit the debt wall. And what's going to happen? Well, we went from interest rates of nothing to sort of 6 or 7% of mortgages. So housing has to collapse at some point. It's just got to go. Because if you can only buy half the house you could buy before, then the price of houses has to kind of cut in half by that model. So I think companies that are deeply in debt because some private equity firm put the screws on them, like, BlackRock or KKR or whatever. I'm finishing Gretchen Morganson's book. You make you want to shoot people. I mean, I have to be careful because I want to say shit on Twitter that would get me in trouble. I would give Leon Black a sex change with a rusty butter knife, based on what I know about Leon Black. So I wish we would have a bold correction that might not be the last, but I could scoop up some of these arguably sold off commodities that are commodity-based investments that are already, I still think, at a fair price. One time Jesse Felder said to me, sort of in a DM, he said, be careful about missing opportunity just because of your macro bearishness. That actually is what triggered me going into energy in 2020, because I knew the energy story was a good. When the Dow kicked out Exxon, and the energy sector had dropped from 16% of the S&P down to 2%, I said, that's got to be some kind of bottom. I mean, you can't run the world with the most important commodity of them all, energy, and have it be 2% of the S&P. It just doesn't make sense to me. You could throw Facebook down the drain, we'd all be better off. You could throw NVIDIA down the drain, we'd probably be better off. NVIDIA will drop 95% at some point, in my opinion. It'll be one of those complete free falls, not because their chips aren't important, just because they're mispriced. Tesla will not figure out how to make cars in quantity before their patents have run down. And so I think the high flyers, the markets are broken. Supposedly 490 of the 500 stocks in the S&P actually have no return. And it's the top 10 super stocks. And everyone focuses on, well, how do you pick the next super stocks? I go, no, the question is, why are 490 supposedly productive companies earning investors no money? And my dark side says it's the Cantillon effect, and that is that once we democratized investing and there were not big money guys who were investing in these companies saying, hey, shape up or ship out, instead, 14% of the market's Vanguard. We got millions of investors, which means there's no voice. And so the corporate guys and the legal guys and the private equity guys make sure that by the time the money's been trickling downhill, by the time it gets to Joe's 6-pack share, they don't have any money left. It's all been taken. And so I think the fact that 490 stocks are doing nothing is the story. And forget about those high flyers, which I think are all going to hurtle to the earth. They will have enough fuel in the tank to make it to the crash site.
Do you have any thoughts at all about international stocks, maybe emerging markets, Brazil, India, South America? Do any of those look attractive to you at the moment, seeing the situation right now when it comes to the US stock market? Or do you think we'll see a global market crash that will take everything down?
So my international experience is zero. For a number of years, I owned RSX, which was the Russian mutual fund. And if you looked at their equities, they were priced like, mattress at the thrift store. The company putting out huge amounts of oil and stuff were priced with PE ratios of 3. It was really stupid. And then we, Putin moved towards Ukraine and moved into Ukraine, and I watched RSX just go down the hill pretty steeply. And I decided to stick my big toe in again, a quantity that if I lost it all wouldn't matter at all. It would be, if I lost it all in one day, it would just be a sort of a so-so bad day, that small. 2 days before RSX quit trading, I bought some. So now I have basically defunct RSX. It might reappear, but I'm guessing that the marauders will find a way to take everything from it before it reappears. I've heard that Wall Street is trading Russian debt, which means that the rules are bifurcated for those who are wealthy and powerful and those who are not. If RSX came back, if it came back at a credible price, which I don't think it would, I'd jump right back in. Tavi Costa, who does brilliant analyses and very, very pretty charts, convinced me to look at Brazil. And so a couple of weeks ago, what I always do is I always buy an amount of something that's so small that I don't care, except for I care enough to pay attention. Now, Brazil has political risk always. But I bought I think it's EWZ is the ETF, a small amount. And Petrobras would be interesting. And you always worry about nationalization. I own 3 platinum miners in South Africa. And the political risk is huge. The political risk is absolutely huge. And but they're priced for total disaster. So they have cash on the balance sheet. They've dividend yields of 8%, PEs in the single digits. They're the 3 biggest platinum miners, and the price of platinum hasn't moved. And so they're not getting any tailwind from a rising platinum price. If platinum all of a sudden gets a meme stock tailwind, holy moly, right? These companies are going to go wild. And I picked those ideas. I believe this from a YouTube presentation by a guy who analyzed each one separately, 3 separate YouTubes. Guy had like, I don't know, 75 clicks, but it made so much sense. He went through the balance sheet and pointed out I go, holy shit, I'm buying those. And then I got a call one day from a guy who says, I'd like to chat, or I got an email saying, I'd like to chat. I'm the single largest holder of SBSW. I'd like to chat. And I go, well, yeah, I'd love to chat. He explained to me what the story was. Turns out rhodium's more important than I realized and things like that. But so, yes, I'm a commodity supercycle bull. I would love to cherry pick the bottom, but I keep nibbling at it because I know that there may be no bottom. So I don't want to say, oh, I should have done something, right? The mistake I made in 08, by the way, is I should have bought proportionate to risk. So I was convinced in 08 we had another factor, 20 or 30% to go. And therefore, I bought very little. What I should have said is, how much do you want to own at fair value, which is where we're at. Kind of trying to fix that mistake this time and say, look, own some under this risk condition, own some more under this risk condition. I'm trying to adjust for risk instead of all or nothing, which I tend to do. Have a hunch, buy a bunch, right? Except I average in.
Yeah, interesting you brought up Russia there. I'm currently in Serbia and moving towards getting residency here. So at that point, I should be able to access a broker who can get me Russian equities. So I am looking at Gazprom and a few others. I know there's going to be some people who are going to roast me in the comments about that, but hey.
They should eat shit and die. You're right about that one. Yeah.
Well, I wanted to move to some more controversial political topics. I have people in the comments whenever I bring this stuff up, they say stick to commodities. So for those people, you can leave now. We're done. Yeah. We're going to move into the more controversial stuff.
So, yeah.
Well, let's start with RFK and the presidential election in the US. I know you're personally rooting for RFK. So firstly, why do you think he would make a good president? And secondly, do you think he actually has a shot at becoming the president of the United States?
And there's a third one is, will he have a positive effect even if he doesn't become president, right? So the reason I support him enthusiastically is he has convinced me that he is trying not to lie. He's trying to get it right. And he's a very fast learner. I've seen him take on topics that I go, there's no way with what he's been doing for the last 10 years, he's had time to read about that shit. And he learns it very quickly. So he's very, very smart. And I find him totally self-consistent. So he will correct a position and say, no, this is my position. I think he's been right about the vaccines all along. He got demonized, and I'd kind of said, he must be screwed up, that he can't be right. And some of the models for his vaccine thinking didn't seem quite right to me. But when you listen to him, boy, he knows a lot more than Fauci does about shit like that. He's very, very impressive. So I've listened to many, many hours of podcasts of him, and I really like the guy. And for a Collum family member to go for a liberal Democrat for president is quite a feat. The other guy who's really interesting based on what he says, but I'm distrustful that it's like this, like about as authentic as a boy band is Ramaswamy. So he says all the right things, but the boy bands all sing like birds too, but they're all overproduced. And so I don't think Kennedy's overproduced. I think Ramaswamy might be, but I'm glad that both are in there ripping and tearing at the current system. I wasn't a Trump supporter for a 2024 run. I said we kind of need to get the inflammation down a little bit here, which is Kennedy's biggest push. Is we gotta get back to communicating. I love his push on that. He still buys climate change. But he's a quick learn. I think he hasn't had time to think it through. But you're never going to find a perfect candidate, so don't wait around for one. But now I'm so pissed off. I want Trump in there. Here's my dream scenario: is he gets elected while in prison and pardons himself. That would be so goddamn funny. Now, Kennedy's already having an effect. We're hearing about how the CIA killed his father from a guy who seems to have some inside information, how Sirhan did not. Now, how the CIA killed his uncle, how Sirhan in no way, shape, or form killed his father. So he's giving us a bird's eye view into some of historically most important CIA operations, in my opinion. And I think the CIA is involved in way more than a lot of people realize. And so there's that. As long as he can stay at the microphone, we're benefiting. Every day he's at the microphone, we're benefiting. Every day Ramaswamy's at the microphone, we're benefiting. I would like to see that if somehow one of those guys doesn't end up on a ticket somewhere, that at least one, maybe both, somehow find a way to go independent and mess with the system. I want one of those guys to disrupt. And if, for example, Kennedy ran, who do you think it would hurt, the Democrats or the Republicans?
Probably the Democrats.
I think so. Liberal Democrat hurting the Democrats. But I think Kennedy, I'm not sure Kennedy does have a bigger following amongst Republicans. So it's not clear to me. He's kind of the Ross Perot of this era. And, did Ross Perot do anything? I don't know. But Ross's message wasn't as strong as Kennedy's or Ramaswamy's. So yeah, I like Kennedy. And I have yet to find a flaw that's enough to bother me.
Well, let's end this interview by.
But I don't think he'll be president.
Okay.
I don't think he has a chance of being president.
Interesting. I'd like to,
unless the Democrats say, "Holy shit, let's go with him."
Right, which seems very, very unlikely.
The Democrats could, and then Pharma will collude with the CIA and they'll cap him, so he won't make it.
There you go. I want to end on a rabbit hole. Let's go down one. And that is to do with the WHO and a number of events that are coming to light. One is the WHO Pandemic Accord, which is in the works. I believe they're presenting the final draft in 2024 and hoping to bind certain countries to that agreement, which gives them certain powers in the case that they declare a pandemic. They've already launched a global digital health certification network in collaboration with the EU. This was based on the COVID passport system for travel that the EU was doing during the pandemic. And now we're hearing about them developing new vaccines for a so-called disease X, which they're saying is an as yet unknown virus that could be deadly. So they need to test out as many different vaccines as possible just in case. Now that sounds very suspicious. And now the chief of nuclear, chemical, and biological protection of the armed forces of the Russian Federation, very long title, has come out saying that the US engineered COVID in Ukraine with the goal of releasing it as a bioweapon to consolidate power, and they may do it again. He stated, the US has begun preparing for a new pandemic by searching for virus mutations. We do not rule out that the United States will use so-called defensive technologies for offensive purposes, as well as for global governance by creating crisis situations of a biological nature. So what are your thoughts on this whole mess of a situation? Is the WHO looking to gain a massive amount of control to bring about supposed pandemics in collaboration with world governments, or are some people just blowing it out of proportion?
So there are over 36 US-based bioweapons labs in Ukraine, as admitted by both the Pentagon and by Victoria Nuland, or Victoria the Hutt, as some people call her. So I think his assertion that they were developed in Ukraine is not ridiculous, but I don't think there's a way to distinguish Ukraine from, say, Wuhan or who knows where else in the world, right? We just know of those two. I think the rest of this Ruski's claims are spot on. I think I sign off on every one of them. Some of it could be wrong, but it all seems completely within what I consider a reasonable Overton window. I think the idea that they're preparing for the next pandemic, they're ignoring the fact that one could argue that if you include COVID, we've only had 2 bad pandemics in the modern era, starting in 1918. I would argue that you could exclude COVID from that because I think it was a largely fabricated narrative, and I think it was a nasty ass flu. But I think that the stats are so totally corrupted, and I think the response to it was profoundly bad and probably premeditated. And it's I think very bad people orchestrated it. So if one could surgically find those people, I'd round them up and hang them. Now, here's the problem. It's never surgical, and you end up with scenes that look like the Cultural Revolution in China. You end up with, storming the Bastille and guillotines and stuff like that. So that solution, a surgical solution of finding, 1,000 evildoers and lopping off their heads, it just never works. And at some level, they count on that, right? But I could easily imagine us reaching some point, Richmond, north of Richmond. I could easily imagine us ending up with an American Spring or a global spring or whatever you want to call it, where guys in power are at great risk. And it's not something, anyone who roots for that is ignoring history, because history shows that the end result may be perceived as positive, although this history is written by the victors, so it's always viewed as positive. Those will be tough times. That will be the fourth turning part 2, right? That'll be the latter half where the fourth turning goes completely rogue. But some of those guys deserve that. So and our complete failure to catch anybody at anything. I mean, Biden could be in jail for the rest of his life on what we already know, right? The guy who actually has been exonerated is Trump. They tried everything under the sun. He's got a clean bill of health, best I can tell. They couldn't find shit on him. They're getting him for jaywalking and stuff now. And so yeah, and the digital IDs, it's all authoritarianism. I think I've got this sort of worldview. We're all increasingly frustrated with how the world's functioning, both at the ground level and in the big macro picture. The ground level, we're dealing with computers, and every computer interaction is a binary choice. So you put in your credit card and the computer says yes or no. You pay the bill or not. You go through the airport and the computer says yes or no, let them through. You call helplines, you're going to get more and more chat GPT. There will be no human intervention because there's no human intellectually capable of intervening. There will be no system built. The system will not have built into it a capability of human intervention. And each decision that's made by a computer is a kind of an authoritarian pixel. And we are going to, I think, head towards a world where every decision is being made by computers, and it will be a very rigid, authoritarian world that may not be recognizable as authoritarian. But one time I got mad at a helpline person. I try not to because they have a shitty job. The worst job being, by the way, working behind the counter at the airport where everyone's upset. But I try not to get mad. I often ask them, how many calls, what percentage of your calls a day are people who are mad? And the answer is, I don't know, 80, 90, right? So I got mad and I told some lady to fuck herself because I kept asking questions. I just couldn't get the answer. And I got off the phone and about 10 minutes later, I go, was that a computer? Because she kind of cycled back to stupid answers. I'm going, I think I was talking to AI. And I don't want that world. I don't. I think that world is destructively bad. I'm not, as far as Elon got to, where he said we've got a 15% of surviving the AI. Although I could imagine a mishap, right? I have no trouble imagining a mishap, but I'm not there yet. And my brain goes to places pretty comfortably. So the fact I'm not there is not from lack of effort. But I do think that there's 100% chance that this increasing role of computers in our lives will be a very stiffening experience. We will forfeit a lot. CBDCs, we know those are awful. There's no way those are going to be good. And there's no way we're going to stop them, I think. And even if they stink, you go, oh, then we won't use them. No, we'll use them and they stink. So no, I'm not optimistic about the role of tech in society now, and it seems to be where it could do good. Politics prevents it from doing good.
Very well said. And on that note, it was awesome having you on, Dave. Really enjoyed the conversation. For those who want to hear more from you, where's the best place they should go online?
Well, I'm at Twitter at David B. Collum. I'm supposed to hype my year in review at Amazon. There's two there. One is years 2009 to 12 in one volume because they were shorter, and then now there's 2022. I can't quite imagine why you'd go there because they're online. But there's people who say, well, I want to buy the book. Think of it as Patreon. So the guy who I didn't do it. Some guy formatted it for me. He said, but you've got to sell it. So now since he formatted, I'm selling it. I've made a couple of grand off it, so, but if you want to buy it, just to whatever, put on your shelf. He released the 2022 about 6 months into 2023, which strikes me as a poor timing on a year in review. I think I'll probably do that again with 2023 and release it simultaneously with the free web version, and then maybe I'll make some more money. I don't know. I didn't write it. I don't write it to make money.
Great. Well, I'll put a link to your Twitter as well as to the year in review book if people want to check that out. And thank you once again for coming on the show. It was an awesome time. I learned a ton, and I think the audience will too. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.